Hi guys, welcome back. We're back with another video. In today's video, we're going to talk about how you can identify peaks or reversal points at supply and demand levels and what you can expect from there. We're also going to talk about the market maker cycle and why it is important to keep it at the back of your head. We are going to look at time frames and how you can determine your targets and how you can use proper risk to reward when trading. We're also going to talk about how levels can be misunderstood and how waiting for a daily close can help you. So remain patient when waiting for these setups. All right, guys. So I uploaded a video where basically I was breaking down the reasons why I took, some trades from last week. But of course, there's not really much of me explaining on that video. But if you haven't watched that, do watch that. You will just see a pop-up right on the top of your screen. You can actually watch that video to understand where I'm coming from with this. So I'm just going to give you guys a small review of the video, but what I'll be focusing on right here is our USDCHF trade breakdown. And as you can see, what I'm basically doing is showing you the structure or where we are trading away from in our higher time frames. So as you can see, this is a clean chart, and this was actually a live trade that I was trading as we were trading with my VIP team. All right, so as you can see right here on USDCHF, what we did was we can clearly identify a peak, right? This is in our H4 time frame. As we've identified our peak, the next thing that we did was identify our levels. Already we could identify level 1, we could identify level 2. In our anticipation, as you can see where we had entered the trade, we wanted to see this push down all the way down, leading us into level 3. Right, so I'm going to obviously break it down for you as we go through the charts, but as you can see, this was done live as we were in this trade, and as the trade moved in our direction, there was some scaling in done, but this was basically what happened on this pair USDCHF. It finally actually went all the way down and reached our target. Right, so I'm going to be breaking down that for you and also making you understand how you can keep trading that easy for you without, having to complicate it that much. So as you can see right here, from the anticipation right here, where we entered the trade, this actually pushed all the way down into our level 3. Right, so I'm going to be taking you through that in the charts. Remember, if you haven't watched this video, do watch it through the pop-up, right? Just look at the top of your screen, click on that, and you'll be able to watch this video to understand this video much better. All right, guys, let's get right into the charts. Before we jump into the charts, I just want to explain the market maker cycle. Remember, I always try to keep this very simple for you guys. There is no need to complicate this in any way. Right, so the market maker cycle is a very simple pattern. What we're going to be looking for is very simple, right? If we're looking at an up phase, we want to see a peak formation being set, a level of rise, another level of rise, and then a last level of rise, giving us another peak formation the other direction, right? Simple as it is. And if we're looking for a down phase, we want to see a peak formation being set, a level of drop, another level of drop, and then the last level of drop, giving us another peak, right? So what we want to talk about here is how you can identify reversal points at supply or demand areas. Now, the first thing that you would want to do, basically what we did when we're looking at USDCHF is very simple. As you can see, this is in our daily time frame, and what we identified in the daily time frame was price was back at a major supply zone, right? This is a major one because, as you can see, not really much of action around that area. Price did interact with that supply zone right there, so this was a nice move back to that supply zone, right? So we were looking for sell. So understanding these supply areas or understanding what the market is doing from your higher time frame will now make it easy for you to count your levels. It will now make it easy for you to make better decisions when trading. So just by looking at this from the weekly time frame, what we can see is price gave us a base drop area. So this is a major supply area in the weekly time frame. So as you can see from the weekly, we can see an attempt back there. So this was their second attempt back at that weekly zone. But as we're looking at it from the daily, this is what we could identify. Now, if I take it down to the 4-hour time frame, what we can see here is we had the high of the week. Remember, this is your 4-hour time frame. So this is your high of the week. this comes as a peak formation. From that area, we identified a level of drop, meaning that is 1 week of drop when we had that mid-week reversal. So after that 1 week, as you can see, we went into a consolidation. Right, so now just by looking at it from our BCMM perspective, from the 4-hour time frame, what we can identify is this peak formation happened just above the 800 EMA. The 800 EMA is this EMA with this color right here, as you can see. This is our exponential moving average. Right, so we had that move above the area, right, a peak formation, and we had a clean drop, right, clean drop. And as you can see, that ended the week right here, just trap below the 200 EMA. Right, so as we had the pullback, remember when we took our trade was right here. Right, if you want to see the full trade breakdown, the live trade, remember this is not just a before and after teaching, no, right, this was taken live, and you can go and watch that. Remember, just look up your screen and you will find that video, or just find the link in the description below. I'll make sure I leave it down there. But what we could identify here is we had one level, right? This is more clear in the H4 time frame. As you can see, that becomes 1 week of drop. The dealer ends the week, another week, and then we had another drop. So as we had already had these drops that week, I identified a trade setup right at this area, as you can see, and that is when we actually took the trade. Right, so as you can see, this moved all the way down and went for over 120 pips, right? But that was because we understood the level count, right? We understood the level count, and remember, we also kept in mind that we had the cycle. Within the cycle, once we identify a level of drop, the next thing that we want to see is a level of drop after the dealer has trapped. And in this case, we look for those entries at these points. So the only important points that we might be looking to enter a trade is right there, this area, as these are our high levels, highest points where we can now push into the second level. So we had already identified one level. So whatever we're doing is we're looking for sells in that direction, because we had already identified that we are coming from a supply level in our daily time frame, right? That was very clear already. So obviously what we'd want to see from that area is moves to the downside. Now, for some people usually get confused. Some people would enter a trade at level 3 and would want to hold the trade until level at level 3, and would want to hold the trade as we reverse until the market completes the cycle. But you don't really have to do that. To make it simple for yourself, since we entered right here, an area where you can look to take your targets can be this recent low, right? If you actually go and watch the video, you would understand that our risk was not really that much, right? As we took the trade somewhere here. So our stop loss was just above this area. And as you can see, the risk to reward on this is amazing, right? So you do not have, to hold it and then later end up, not closing the trade. You just end up closing the trade with a little profit or a loss sometimes. So as you can see from here, if our stop was just above, we had price moving down right here to our first target. So this can be a nice area or a nice strategy to look for your targets. That being the first target, we also had this second low, right, which was a major low, right, and also a demand area. As you can see, this was a demand area because of this, right? So that would have been another area where you can actually look to target and look for shorts. So it is very important to know of areas where you can look for reversals, or where you can target for your take profit, right? This is where a lot of people will get confused, because some people will look at the cycle and enter a trade right here, looking to hold this forever, only to see a little bit of some profit, and then before they know it, the market is now completely reversed on them, as the market is doing right now. So the market will always continue doing the same thing. As you can see right here, we've got a peak formation, and as you can see, what the market is doing is the market is just trading away from these points. So same thing that we had right here. If we are looking for an up phase, once a peak has been set, we are looking to enter trades at this area. That's if we have an understanding of what the market is doing. And that's exactly what's happening right now. And our explanation behind that is because the market did give us 3 levels of drop, right? In this case, 1, 2, 3, right? You can just call it 2 weeks of drop, but within this 2 weeks of drop, we had 3 level counts to the downside, right? And then market reacted to this demand area right there. Right, so this basically kind of looks similar, right? I were trading gold yesterday, and with just how this looks like, I was just checking it out. It has a very similar, pattern when it comes to gold. As you see, gold, what happened? Gold gave us a peak, and for that intraday, we had level 1, level 2, and as you can see, the market is trading away, right? So it is very important to understand where the market is from a clear chart, and how from there you can then determine how you can counter levels and look for setups, right? Because remember, the market will always move in line with the market maker cycle, whether you like it or not. I mean, it has been proving over and over again. This has been happening for years. These are things that we repeatedly keep seeing on the market. So it is very important to be very selective when looking for these setups. And just by understanding this, I'm sure that you can see that you do not need to trade 100 times in a week or in a day to make good money, right? These days we've got prop firms which give traders good capital. So you can jump on a trade like this with 5 to 10 lots, 15 lots in a week, and that could be good money for you. Right. So this was USDCHF, and currently right now we are holding a trade on GBP USD. As you can see, we just have our stop loss just above the high of the day right there, and our entry was right there. So I actually want to see this drop all the way down to this area. So as you can see, my risk on this trade is $385, which is around about 15 pips, and I am targeting $3,000, and that's 120 pips, which does make very good sense. Very good sense if you are looking to trade this. So we are going to keep an eye on this, as I also have a trade on Euro USD. A bit of a slow mover, but we'll see how this one goes. Our stop loss is just above the high of the day. Alright guys, I hope you learned something from this video. Don't forget to check out our free Telegram channel. Find the link in the description below. If you are new here, don't forget to hit that subscribe button. I've been giving you guys so much knowledge on this channel. All you have to do is subscribe and share with your friends. Cheers.